So when we look at balance sheet of a company, so there are two parts in the balance sheet. First is the equity and liability part, and second is the asset part. Equity and liability part is also known as the sources of fund, basically where the money is coming from. And the asset part is also known as the application of fund, where is the money going. So assets are further divided into current assets and non-current assets. Current assets are those assets which are to be used within the time frame of 1 year. And non-current assets are those assets which will be there for a period of more than 1 year. So the example of non-current asset on your personal balance sheet would be something like an FD for 3 years. So that is an example of non-current asset. Suppose if you own a shop, so that is an example of a non-current asset. But example of a current asset will be, suppose if you have money in your current account which will be used within 1 year, so that is an example of a current asset. Within equity and liabilities, so there are non-current liabilities and current liabilities. Non-current liabilities are those liabilities, suppose if you take debt for more than 3 years, and current liabilities, suppose if you take debt for less than 1 year.